Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP 500 view using the emini futures contract and identify some high probability action areas for the trading week ahead and some price objectives. So last week we actually closed down 0.5% on the week, so essentially flat. And then over the weekend, obviously, we have had the tariff headlines develop. So as of last week's close, we were actually out of correction territory. We're only down 7.9% now from all-time highs. And as of this morning, given the current price action, we are going to gap up just over 3%. Now, noteworthy that the last time on a Monday gap has exceeded 3% was the Monday coming out of COVID when the Pfizer jab was announced. So, and then from there, obviously, the markets extended higher. So just a historical reference there to keep in mind as we go into this week and through further into the price action in the coming weeks. That with this 3% gap higher on a Monday, the last time it happened was post-COVID. So, in terms of the levels to keep in mind, as issued this morning, the weekly bull bear zone I'm using for this week is 57.40 to 57.30. We're trading just above, well, now about 40 points above the weekly projected range resistance, which is 58.10. Our daily volume weighted average price on the 5-period look back is bullish and currently at 56.61. The weekly volume weighted average price also bullish at 55.71. And in terms of the time framing, we are actually extending now out of balance. So we were in a 7-day balance zone, which was referenced as 57.41 to 55.96. Weekly one time framing up now would end on a move back through 55.96, and on the monthly time framing now we're actually neutral. And obviously now we have a gap situation with an unfilled gap at 56.84. So in terms of the market breadth, as of Friday's close, we had 60% of stocks trading over their 50-day moving average, with just under 50% over their 200-day moving average. But breadth has obviously significantly improved now. And as of the open today, I'm expecting breadth to show another leg up in terms of improvement as well. So with things looking very constructive on that side, we want to pay attention to the opening prints today and some of the, certainly in terms of the Mag 7, which currently are all trading higher. So in terms of the calendar for the week ahead, we've CPI tomorrow, we have PPI on Thursday, initial jobless claims also on Thursday, and Michigan's consumer sentiment on Friday. What I would say now with respect to the data, obviously the data is going to start feeding through the tariff effects, but the market is likely to look through those now, certainly with this 90-day pause in terms of China and the US, and a significant de-escalation in terms of those trade tensions. I think any pullbacks that we get from data shocks will be bought into, and so they'll provide trading opportunities as the market adjusts now to this new reality of, like I say, a significant de-escalation. We also, earnings season is pretty much wound up, but we get Walmart and Applied Materials on Thursday. Walmart obviously giving an up-to-the-minute read on the tariff implications, certainly on the consumer side. And then obviously with the Michigan consumer sentiment on Friday as well. So I think market volatility around the CPI will be dampened now, given the tariff developments, and certainly into Thursday, Friday. I think any volatility, like I say, that we do get from the data will provide entry opportunities, I believe, anyway, on the long side. So let's take a look at where we are on the weekly chart. Like I say, the 5-period volume weighted average price is bullish. We're trading into or just below the 78.6% retracement of this entire decline. And so once we can start to see price close above the 58.80 level, then technically I would be thinking that new all-time highs could well be in the offing. So keep that level in mind in terms of the weekly close. Looking at the daily chart, we have, like I say, that 58.81. We have exceeded now the equality objective, which was 58.24. And we obviously have 58.10 being the weekly projected range resistance, which we're also trading above. So structurally, things are setting up bullish for the week ahead. And if we move to the intraday chart, and we can start to look at some setups that may be developing here. So what I'm tracking at the moment on the intraday, this is the hourly time frame, is this 5-wave sequence. So let me just highlight that for you using the Elliott wave tool. So we have wave 1. We're going to use this as our 2. And then we have our 3 and our 4 swing low. And so what we'll be looking for is an equality objective to target for our wave 5. So in terms of that target, we are going to be looking for a 59.67 versus the swing low that we have at the 55.90s. So if we get a little bit more granular here as well, this volume weighted average price that's tracking here is from the swing lows of this sequence. So keep these anchored volume weighted average prices are pretty well respected, and you can see here we tested into the zone twice before extending higher. So we are now looking at. Let me just change that. So we have an interim 5-wave sequence here to complete our current sequence. So what I would be looking for is for us to test up into the 5900 area as we go into today and tomorrow, and then any pullback that is equidistant to our wave 3 structure. So something back into potentially the 5800 level would be an equality objective, and then that would set up that 5th wave extension to target the higher degree time frame, which would see us trading back up into the 59.60. So what I'm going to be doing in terms of the personal plan for the week is I'm going to be looking to see where we get an interim high here to see a wave 3 high put in place, and then, like I say, I'm going to be looking for the equality objective versus our 1 and 2. So I'll just be looking at an overlay of wherever we get that high, and then I'll be looking to the equality. So if we top out into that 5900 area, we'll be looking at 58.21 to 57.98 as an area where we would likely put in a wave 4 swing low, and then we will target the 5=1 objective on the higher degree time frame up into the 59.67 area. At this stage, unless we get some new information with respect to the tariffs and any further escalation in terms of the trade war with China, I don't really have a particularly bearish scenario in mind at this stage. But you can get my daily updates through the Tickmill blog, where I'll keep you abreast of things. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.